Alex, welcome to Real Vision.
Hi.
Alex, let's just start with the elephant in the room here. Just over 2 weeks ago, BitMEX announced it reached a settlement with CFTC and FinCEN, that's the Commodities Futures Trading Commission, and the Financial Crimes Enforcement Network here in the United States. The announced settlement was for $100 million. This stems from allegations that BitMEX offered U.S. persons unlicensed crypto products, which is a violation of federal law, and had inadequate AML KYC safeguards between 2014 and 2020. It's important to point out that BitMEX neither admitted nor denied these allegations. This is all now in the public domain from original reporting by CoinDesk, Wall Street Journal, and from the consent decree filed by CFTC in the Southern District of New York. Finally, there's this. BitMEX also agreed that, quote, anyone located, incorporated, or otherwise established in or a resident of the U.S. is prohibited from accessing the BitMEX platform. This from a CFTC press release. Alex, what happened? What does it mean for BitMEX, and how do you fix this moving forward?
Yeah, Ash, as you know, and we stated, we are one of the very few, and you can see this from some of the articles that were floating around globally on regulatory moves in the direction of crypto exchanges. We're one of the very few fully verified, fully KYC'd, AML'd exchange. Means all our users have this, and that means that, as you said, we don't have any US citizens, or from the description that you have, on our platform. And that means that currently, yes, one of the largest markets and interesting markets from the crypto space is not available to us. And we have to cope with this situation. I think that the crypto market, especially in Asia, is very much evolved and evolving still. And we're focusing on other regions for this moment in time. But going forward, we will have to find an answer how we tackle the market. As you said, for now, we don't offer this to U.S. citizens.
I should also point out, you are new to BitMEX. You weren't here during the time that these allegations took place. Give us a sense, when did you join? And you signed up knowing what you were getting yourself into, obviously, with the legacy hangover for things that happened before you got here. Give us a little sense of that story.
Yeah. So I joined January this year. So it's now, 9 months into BitMEX. And the first discussions about joining BitMEX were more or less mid of last year. And for me, this is really, the development going on in the crypto space, especially from the regulatory end, that clearly shows that the next big thing, which is evolving to the next level of maturity, is the derivatives market. So I was playing around with this idea, getting it onto the derivatives side for quite a while, coming out of my former job at Börse Stuttgart. And when then I had the possibility to join BitMEX, which is an icon in the crypto world, as Arthur Ben and Sam built this iconic brand built on this unique product, the Perpetual Swap. That was, in a sense, a dream come true, perfectly knowing that we have a bunch of work ahead of us. But I was really looking forward to joining BitMEX and steering it going forward, coming out of that tremendous success of the past.
Yeah, well, let's talk about that. Let's talk about the derivatives market. This is obviously something, perpetual swaps, incredibly important in the space, particularly for traders. I think for a lot of people who think of Bitcoin, for example, as being an off-the-grid asset that is stored in a decentralized way, they probably may not understand what the significance, what the role of derivatives are, particularly perpetual futures. Give us a sense of what that product is and why it's important in the ecosystem.
I think the most important thing is, that the perpetual swap is comparable to, in a sense, to large futures markets, which we've seen from the classical industry. However, the perpetuity of the product itself and the structure of the margin product means that you can only lose what you bring to the table, is the innovative aspect of that one. So a lot of the market risks that we've seen in the classical financial industry that led to tremendous outfalls or fallouts in the classical financial industry are very, very unlikely, if not impossible, on the crypto side, to crypto derivative side, through this mechanism. And that, from my point of view, was the big innovation that was driven driven by BitMEX, by Arthur Ben and Sam, when they invented the perpetual swap. The futures market is so important as it gives us the opportunity, especially with the evolving maturity of the underlying cash markets, to hedge our positions and operate for or against developments of the market. And we see also from the classical side that the futures market, most of the times by far, are larger than the underlying cash markets by factors. We see this from the classical side, and we see this mirrored also on the crypto side. Now, as I said, with more and more mass market adoption of the cash market, the necessity of a deep liquid fungible futures market is absolutely vital for the next iteration of the financial industry. And for me, as a crypto addict, it is absolutely the next big thing that will be driving into the industry, as more or less the crypto cash market is already sort of a commodity, and all regulators globally and governments are coping with that development.
Yeah. So give us the 101, though, on the derivatives, on these perpetual futures, for someone who may have not heard of them before, for someone who doesn't have a financial background, maybe someone with a tech background who's a bit interested in Bitcoin but doesn't really understand why perpetual futures are something that people would need or want exposure to.
It is, in a nutshell, it is a means to secure myself against the development of the underlying, which means the development of the price of, for example, the Bitcoin. If I have the Bitcoin US dollar perpetual swap, then it's against the development of the price of the Bitcoin in US dollars. And I can hedge myself, my risk against the price movements in either the wrong direction or in the positive side. In the positive direction, I'm anticipating the price to move. Yeah, very, very condensed and very, let's say, high level in a nutshell. And the interesting piece is, once again, that in full contrast to classical futures markets, I can only lose what I bring into the market. And I have, depending on certain time frames, which might change, varies to the exchanges, depending on the movement of the underlying, and with this with a swap, I might require to top up my margin. So my money that I bring to the table for the trading. And so in that sense, it is a highly liquid product. It is a product that, as I said, has very, very limited market risk. It's a very easy to use product, but when it comes naturally to the leverage, it can relatively fast get into a more sophisticated, more complex product. But to hedge my positions against market price risks and market price developments, it's absolutely vital. Otherwise, I'm betting on just luck that the underlying just moves in the direction I'm anticipating it to move.
Hey, if you like this clip, be sure to check out the full interview and more only on realvision.com/crypto. It's 100% free. Sign up now.